January, February, March was strong, and then April, or did what we expected, and then April is surprisingly stronger, which is again kind of indicating strength at a time when we may want to just be a little bit more cautious. And I think as we dive into the specific markets in South Carolina, let's look at year over April in each of the markets to see kind of what it's doing relative to year over year for March and February.
What I saw certainly with my clients, and not necessarily just in South Carolina, but I do have clients in South Carolina, but when we were able to be a little bit more flexible and respond to the demand we were seeing, and not be so set on a rate or something like that, then we were able to actually see some more pickup, and ultimately from a RevPAR revenue standpoint, it paid off.
Welcome to RevLabs by PriceLabs.
Hi, everybody. Welcome back to another episode of Revenue Radar with RevLabs. My name is Becca. I have our esteemed guests, Sarah and John, with me again. And today we will be diving into South Carolina, which is actually my home state. It's where I got my start in vacation rentals. I was a property manager on Folly Beach as well as Isle of Palms. So it's really special to be kind of talking about the markets that I know the best, probably. And Sarah, you also have some experience here in South Carolina, no?
Yeah. So historically, I've been familiar with kind of the beaches of South Carolina, and then I do have a few clients now who are in South Carolina as well. So yeah, happy to be talking about it.
And also, just shout out, the Women's Summit will be here in Charleston in August. So if any of you are planning on joining the Women's Summit, there will be some revenue management talk there. So super excited for that. But we usually start off the segment with kind of reviewing trends that are happening in the US and the entire country. So we'll start here. And again, this data is accessible. It's free online. If you go to PriceLabs website, go under resources, you'll find the World STR Index, where we highlight just some high-level trends in different countries, different states. So taking a look at this, what are some things that maybe might be changing in the US, or what are we seeing kind of going into our peak season here?
John?
Well, the previous couple conversations that we've had, we've talked about how the latter part of the year has been kind of, pacing ahead. And so right now, we're seeing last year and this year, and, this year looks pretty strong, or 2024 looked pretty strong. But Becca, if you could go to the pacing chart. So the trend as of now is still true. So if you look at the RevPAR pacing, the summer of this year is pacing ahead of the same time last year. I guess the one thing that we kind of just chatted about and we want to highlight is there are some macroeconomic issues going on right now. And so while things may still be showing that it's pacing ahead, those things may not be reflected in the actual data, actual numbers yet, because there's kind of a flywheel effect to these things. So kind of how this shifts over time, over the next week, month, will start to indicate, what the impact of some of the uncertainty is.
Yeah, and I know, again, kind of before we hopped online here, we started talking through, if you go back to the compare tab there, we were kind of just talking through that active listings number, and you can kind of see, I don't know if I'd call it a trend yet, but it is starting to trend down in terms of supply. I mean, it's still very high comparatively to previous years, but it is interesting. Some of the things that we've been seeing and that we've been talking about, not just on this podcast, but like other things, is that incline, that up to the right, and how are we managing that demand that's out there. And now it would be really interesting to see like what's going to happen to that blue line going forward. And we're kind of seeing what John was just talking about, things are looking kind of rosy on paper. Active listings are coming down. I think that's an indicator of something, and we can discuss what that might be. But like those things are all indicators, I think, and trying to contextualize that is the challenge.
I think just on that one point about listings going down, I think one of the factors is, the past couple of years, short-term rentals was kind of like the market to just dive into, and like lots of people could just, easily make money doing it. And I think kind of the challenges both, from some of the OTA, shifts and as well as economics and inflation and all that. I think it's no longer this kind of like, I'm just going to hop in and just give it a shot kind of industry. That's kind of, how I'm looking at it as I'm looking at that kind of decline going down.
Yeah, the risk's a lot higher now.
Yep.
So, yeah.
And also just the number of people that jumped into the markets after 2020 with, good interest rates and occupancy and demand at its sort of highest that we've seen in many years are now sort of being hit with the reality of it, not being that way anymore. And people are reevaluating their mortgages if they're not able to make those payments the way that they were in years past. So definitely interesting. That's definitely a trend that we're going to have to keep an eye on in our future episodes. Let's take a look. We'll drill down to South Carolina to see what we're seeing here. I could have just searched for it, but there we go. So looking at South Carolina, generally tends to be a summer market, have not a ton of stuff going on in the winter, I guess compared to some northern states, we do get some like snowbird activity, but really most of the markets here in the state are sort of driven by summer. You definitely see that in the trends. If we're looking at pacing, we're seeing something pretty similar, I would say, to the rest of the country. I think a lot of the people that I've been talking to have been a little bit nervous because Easter was later this year. We saw a lot of, I feel like, I don't know if you all have seen this before, but when Easter's really late, do you think that the demand is sort of the same as it is maybe if it's earlier in March? I don't know if you all have seen that.
Go ahead.
Go ahead, Sarah.
I'll go. I was just going to say that in general, I don't want to say that Easter was good or bad, but I did definitely see, a stronger April. And actually May wasn't so bad either. There was a little bit more, I would say, I didn't think that the rates were as competitive if, say, it had been shifted earlier. But we still saw decent and oftentimes strong demand in certain markets. So I don't necessarily think it was bad, but I do think that it was maybe unexpected for some people. And so were the rates what they were because it was unexpected, or were the rates what they were because people were more price conscious? It's kind of like the whole answer that we have to come up with in terms as revenue managers, like, are we influencing things, or is demand influencing? So that would be kind of the question that I'd like to see, because I did talk to a lot of people who were really kind of surprised by that. So it would be interesting to kind of see how it's all shaking out kind of across the country, with that change.
And that was something I was actually speaking with some folks with recently, some data folks. And a lot of the markets, if you look year over year in April, and I think it's similar in South Carolina, the late Easter in April actually had a kind of a bump up. And I looked at all the markets in South Carolina that we're going to look at, and I think we'll see that. So part of that is January, February, March was strong, and then April, did what we expected, and then April is surprisingly stronger, which is again kind of indicating strength at a time when we may want to just be a little bit more cautious. And I think as we dive into the specific markets in South Carolina, let's look at year over April in each of the markets to see kind of what it's doing relative to year over year for March and February.
And I will say too, like with that, a lot of what I saw certainly with my clients, and not necessarily just in South Carolina, but I do have clients in South Carolina, but when we were able to be a little bit more flexible and respond to the demand we were seeing, and not be so set on, you know, a rate or, you know, something like that, then we were able to actually see some more pickup. And ultimately, from a RevPAR revenue standpoint, it paid off. May not have been what, you know, we had wanted, but to be able to capture the demand that was there, it was good. It wasn't necessarily compressed demand, you know, you weren't like selling out in April necessarily. There were definitely some nice hot spots, but in order to kind of capture that overall lift that for whatever reason we were seeing, you know, when we were able to remain flexible, we were able to capture more of that and provide better revenue for the owner.
That definitely makes sense. I think flexibility is going to be a theme of our conversations for the next couple of months. So anything else that y'all wanted to talk about on the state level? I think so. No. Okay.
Yeah.
So let's dive into our markets. So I've chosen a couple of like disparate markets. So we'll start with Seneca, which is probably more well known as Clemson. So Clemson is the university, it's a town, but there's so much more to this area than just the university. You have Lake Hartwell, Lake Kiowee, Lake Jocassee, some of the most beautiful lakes. They're pristine and so nice to visit. So if y'all haven't visited this region in South Carolina, definitely don't sleep on it. But it is interesting because you do get that mix of some of like the football demand in the I guess maybe fall or the off season, and then you have this really high demand in summer. Anything that stood out to y'all about this market, or we can just do an overview.
We can just do the overview, but I had never actually been to this. I don't really know much about it. So I used to live in Augusta, Georgia too, and it's not that far up from where I used to be. Went to school in Athens, and you know, just never really knew much about it, but learned a lot about it, and it is definitely now on my list. So that's all I have to say about it.
And I'll say it's for a kind of a, you know, football and kind of town, you know, when we talked about Vermont and how like the town was more steady, this market is very seasonal. Okay, I've never been there, but I'm looking at the overall patterns and surprised by kind of the very pronounced seasonality. You know, just for kind of a market that has colleges and everything.
Yeah, and it seemed pretty steady too. It seemed like a pretty stable year over year kind of.
Exactly.
Yeah, so if we're looking at the number of active listings in this market over the past 2 years, we are seeing a slight decrease since like last fall. Nothing crazy, just, you know, we're looking at 1,000 listings. In November, there was about 1,075. Now we're looking, there's about 1,000, which isn't a crazy shift, but I think it does speak to that this market is kind of stable and is kind of set where they've been. Looking at our forward-looking occupancy, we're definitely seeing a little bit of maybe a little bit slower of a couple of weekends in May. I'm assuming this May 8th is probably that Clemson graduation weekend, which is still very strong, very similar to what we saw last year. Summer's pacing relatively in line with where it's been in the past. Late June, it could see a little bit of pickup here. And then you definitely see this demand for those big football weekends this fall. If we're looking at ADRs and if we're thinking about the context of the other markets that we're going to see, what are some differences that you guys are seeing? What makes this market unique?
So I will start with, again, what I said before. If we look at March 2024 and March 2025, very similar, slightly, if you look at the RevPAR, just a tad lower in 2025 than 2024,
Mhm.
69 to 67. But then if you look at April, 2024 was the RevPAR was 79, and the RevPAR, and April's not done yet. RevPAR is 87, right? So that kind of shift over, I think that's one of the things that I noticed of like that quite significant increase year over year for the month of April. And I want to definitely focus on that when we get to the other markets in South Carolina.
Yeah, and $8 is nothing to, sneeze at either. I mean, like $8 in RevPAR is pretty significant, particularly when you take a look at the ADRs and things in this area.
Yeah, and if we look, we can see here. Whoopsies, let me zoom out. Actually, well, I'll just do this. We'll just look at maybe like March through May. And I actually don't know off the top of my head when Easter was last year.
I will look it up while you do that.
There's something, I think it was that first weekend in April, maybe.
First weekend in April?
I think so. John can correct me.
Yep. The Easter Sunday was March 31. So
March 31. So a lot of the way that PriceLabs attributes revenue in our numbers, this is just generally good to know, is we split it up. So I know a lot of property managers out there, especially here in South Carolina, I think you have to look at it by departure date. PriceLabs is distributing revenue by stay date, essentially. But looking at, we did definitely see higher occupancy, but not significantly higher occupancy considering it was an Easter, it was a holiday. But then looking at April 20th, this weekend, and not a huge bump. So there's something kind of else going on. I'm not sure what happened on April 5th, but there may have been some sort of event in Seneca. So not necessarily seeing that lift from Easter, I would maybe postulate, but it is interesting that that April is doing so well, because I think it's speaking to a lot of the managers here in South Carolina. They're saying that their shoulder seasons have been a little bit rough this year. So hopefully coming into the summer, we're going to be seeing an uplift here. So moving on to our next market, which I think is a market that everybody knows, Myrtle Beach. And just to be clear, we're looking at Myrtle Beach proper. We're not looking at North Myrtle Beach or some of the towns south of Myrtle Beach that sort of see similar trends. Sarah, you help a customer of yours in Myrtle Beach, right?
Yeah.
So what are you seeing with that customer? Because it's funny, we're kind of discussing this a little bit before the call, but what sort of surprised you when looking at these numbers?
Well, one of the things with the client that I work with in Myrtle Beach is their product mix. So their product is very different than like the typical, if the aggregated market of Myrtle Beach. So when we're looking at, analyzing their portfolio, one, you have to make sure you're looking at things that are going to be, I think, relevant and applicable. So oftentimes we're not looking at like the general trend that we're seeing in this particular view right now. We're looking at it a more, specific, narrowed in, kind of targeted view. That said, it's really important to keep in mind what's happening in the market at large, kind of like how we talk about in this podcast a lot. It's important to understand what's happening in the US and the world, and, to kind of understand what the tenor is that people are feeling. So one of the things that I found was that, when I first looked at this, I was like, well, that looks a little bit different and unexpected from what I would typically see. Well, first, I mean, it's always important to look at, multiple sources, if possible, but also to really understand what you're looking at too. So one of the things that we were talking about is, up in the top left corner there, we have Vrbo as what we're pulling from here versus Airbnb. So, a lot of this is a pretty traditional legacy style vacation rental market. So as we kind of accept, Vrbo is oftentimes a channel that works well for that type of market. And when you look at, Vrbo versus Airbnb on this platform, there's some differences there. So it was important for me to kind of like understand what I'm looking at. I also use key data. I also use other sources too. So really trying to figure out, hey, what is speaking best to what I'm looking at? What's more apples to apples? And then, of course, understanding that we're never going to necessarily make broad, sweeping changes, on a granular level with kind of broader data. So that's the one thing that I would just call out in general for Myrtle is that, it's a big area. It's got depth when it comes to product. And, the channels and platforms that we're looking at for data and whatnot vary because of the product that they all have and that is contributed as well. So that was kind of the one thing that I thought was particularly relevant with this market. And then again, with my client having a very different product mix, it's important for me then to be focused specifically on the platforms and channels, channel data that is most relevant for my client.
And so I think that, again, kind of taking this at a more applicable to a broader scale, distribution, right? Knowing your market and like here, yeah, the managers have been there forever and like it's probably a lot of repeat guests coming, right? Whether it's direct booking or on Vrbo, which, people are more accustomed to in, a market like this where probably vacation rental was invented. I'm kidding. But right, so I think that's probably part of that. That probably is also why like the patterns are very steady, right? The up and down is very steady because they've been doing this forever. And like people are just kind of accustomed to what they're doing. If I look at, and I really love what Sarah said about you can't make granular decisions on the broad scale numbers. The numbers give you context to set your strategy, right? It's kind of like if you're in the NCAA tournament, you coach differently if you're ahead by 10 points versus behind by 10 points, right? And so the macro level numbers kind of tell you, all right, how do we start approaching the strategy, right? And I think that's kind of what that's how I read what Sarah was getting at. In line with that, what I find really interesting is if you go to the ADR and occupancy graphs, the ADRs are fairly similar, but the occupancy is dramatically different, right? Between 2024 and 2025. And that I think is accounting for the difference in the RevPAR. But like, again, a historic, a traditional market. So I don't want to generalize, but a lot of the operators might be kind of operating more on historical and like, this is kind of the rates that we, this is a high, this is a low. And then the occupancy kind of just like, fluctuates up and down based on the demand is what I'm seeing from these graphs.
Yeah. And the other thing that I would add here too is, most of the supply in this market is 0 to 2 bedrooms, I think is where like maybe even 3, but it skews very small. And as I, from what I understand of this market is it's when you compare it to other like beach destinations, particularly in South Carolina, this is going to be a little bit more family budget driven than say the other beaches in the state. Those are going to be a little bit bigger, a little bit, the demographic is maybe a little bit more affluent. And so I think, maybe kind of what we talked about a little bit here is we really have to be aware of what's going on all around us when we're talking about trying to target a certain demographic that's coming that may be impacted by things that they're having to make choices, right, about what they're going to do. Consumer debt's at an all-time high. All these things are kind of playing into what we're going to see going forward. So all of this is what's happened, right? But what's going forward and what we're going to see, we have to be able to take all of this so that hopefully the trends that we're seeing are not, too negatively impacted when we're looking at this next year.
Yeah. One thing that has changed, and I believe it was here in Myrtle Beach too. So Myrtle Beach has a pretty short booking window for it being like a beach destination. You definitely will get those families that book the same house every year that go in right when they're checking out to book again for next year. But relatively speaking, at 24 nights is like a very short window for a market like this, a traditional market like this. And we're only seeing that decrease. And I think that speaks to that uncertainty. People are waiting to book those vacations. They're not really sure what's going to happen in the next couple of months.
So, I mean, I'll say like complete anecdotal, but for me, I actually sat down my kids the other day and said, hey, there's a lot of uncertainty. If there's a bubble tea that you want, just think twice before you just go and buy it like you used to, right? Like just little things like that. And I'm implementing it in my own family's budget because there's the uncertainty. It's not that we're not spending, right? And I think a lot of folks are kind of doing that, and then businesses are doing that as well, right? If they had a big capital plan, they might be pulling back on it. So I think it kind of, that is, if I'm making that decision, then I'm sure the people who are looking to book are making that decision and, double checking. So I think that's, it's very logical that given the circumstances right now, that is likely to impact our, our industry, even though right now all the data looks great. And so if we go to the RevPAR graph, again, I'm going to keep going back to the March and April for comparison, right? So if you look at March 2024 RevPAR, that was at 89. And then March 2025 is 99. So it grew. But then if you look at April, it was 88. And you look at April, it's 110. Much, much bigger, delta between, March and April. So again, we're seeing that trend similarly of a strong April. Again, maybe Easter, maybe other things, but everything is looking rosy. But just be a little careful or a little conservative.
Yeah. And I feel like the other thing that operators are struggling with is I feel like the cost of operating has just really ballooned. We've talked about that in other episodes before, but with this sort of uncertainty, with the booking windows being shorter, with, everything that's going on, that's just another layer. I feel like there's so many different softwares that operators need these days. There's so many different, just cleaning supplies. If you have an in-house cleaning, your cleaning supplies are so much more expensive than they used to be. So it's interesting. Even if the numbers are looking good, I don't know that it's necessarily accounting for some of those costs and those changes that have happened for the businesses.
Well, and I think one of the other things too, and the cost, that's a huge thing. I think that's all related, but the booking window thing that you were talking about, it's getting shorter, right? So if we're seeing more, if we see more last minute, I don't anticipate that last minute is going to be at a premium rate either. There's more competition there. You get the competition at the bottom and at the very top, right? And at the bottom, it's going to be competing for the supply that's there. And yes, it might be declining, but there's still a lot there. And the ones that are going to capture are probably going to be the ones at the last minute where somebody makes a decision. If we're just going super general, which we're doing here, which I ended up doing, and we say this is who generally comes to this Myrtle Beach market, we have to be aware of who that person is. And that person is probably going to be more budget conscious. They're probably going to make a decision a little bit more last minute, and they're probably not going to make a decision last minute to spend a lot of money. So I think that's kind of, if you can get ahead of that now, understand that the booking window may be shrinking. And again, it might be different for your portfolio, but if it is generally shrinking and you're going to see that demand in a shorter window, and if you're going to capture that, likely you're going to be capturing that at a little bit lower rate than maybe you are thinking about right now. Maybe you're not. But I think that's all related to the cost thing, Becca. Like everybody is dealing with that. John and his kids, they're dealing with that and they're thinking about that kind of thing. Everybody is, and I think even a couple years ago when, people were putting everything on a credit card and whatever, well, those credit cards are getting maxed. So there's not the ability to do that as much anymore. So you not only have, some of the other things, but you have that aspect of it too, where there's just not the ability. So I think we just have to we'll kind of just keep beating this dead horse, but that's something we really just have to be aware of as we move forward in these next couple months.
100%, 100%. It's funny. When I was a property manager, the owner of the company, he actually liked having it was a real estate company, but we had a vacation rental branch. And he said that the vacation rental branch really helped pull the company through the 2008 crisis. Some of the ups and downs that we've had in the last, 30 years. In this market, because it is a traditional market, people still tend to take that vacation. Like if everything else is going to, pardon me, but hell, like people will still kind of hold on to that one special memory and that one special time. But in markets like Myrtle Beach, you're going to Myrtle Beach, one, for the beach, but also to spend money. There's museums, there's golf, there's mini golf. There's so many different things that you can do. And when you're thinking about your vacation budget, if you're going to make it happen, is the place that you're going to stay be the thing that you are really going to splurge on? Or are you going to splurge on the experiences and the things that you actually remember? So even if the occupancy stays good in these markets, I think that shift in kind of consumer needs and consumer spending, it will be felt regardless.
For sure.
And so that goes back to how, the ADR kind of stayed the same, but then the occupancy went up, right? So actually, if you're thinking about everything that Sarah and Becca just said, it's actually being more dynamic, more flexible with your ADR in order to maintain and capture the occupancy. And then the other thing that seems true to this market, and again, I don't know this market all that well, so I'm going to generalize. Our industry has gotten really comfortable with last minute bookings, right? The shrinking booking windows. And I think a lot of folks, because things are looking rosy and because it's always happened in the past, are kind of thinking, oh, you know what? Like, don't worry, it's going to come. And I think that's when you're just going to have a bloodbath because there's going to be a glut of inventory. And then, so if the data is saying that the booking window is shrinking, that doesn't mean that you should follow it. You probably should go against it and say, okay, I want to increase my booking window given all the context that's going on. What are the levers I can pull to encourage people to book? And that's what Sarah was saying. Maybe it's a little lower than you are used to for a 60, 90-day out booking, but that might be a lot better than that last minute, 10-day in booking that you're forced to give away.
Yeah. So I feel like we've had a really good conversation around Myrtle Beach. I do want to jump into Charleston just because that's where I'm based out of, and I love talking about it. Now we've split Charleston into two markets. So if you've been to the area, there are sort of sub-markets that exist within Charleston, and they are actually very different in how they perform. So first, we can look at the Charleston beaches. So this area, I've actually highlighted Folly Beach, which is a little bit south of Charleston, and then Isle of Palms and Sullivan's Island, which is just a little bit, I would say, maybe north of Charleston. It's kind of funny on the map. It's maybe a little bit more east. But regardless of that, these markets are very traditional vacation rental markets. Some of them have had vacation rentals for 30, 40, 50 years. And they have blown up in the past, I would say, 5, 10, 15 years. Charleston in general, the number of people that are moving to the city itself and to the surrounding areas is really incredible. And you've definitely seen that in these beach markets as well. So when we're looking at the Charleston beaches compared to Myrtle Beach, I would say, I think Sarah made a really good point that the type of people that are coming to these beaches tend to be a little bit different than Myrtle Beach. Myrtle Beach is a little bit more of a traditional market. Charleston, I'd say, is a little bit newer just because of the buzz that has sort of been around Charleston in the past few years. I think you see higher ADRs. You do not see as many condos. Very few condos comparatively so to Myrtle Beach. There are some condo buildings on Folly. There's a decent number of condos on Isle of Palms within a resort community called Wild Dunes. But generally speaking, what stood out to you guys about maybe these beach markets? Sorry.
Sarah?
Oh, okay. I can go first. I was trying to, Take turns. Yeah, I mean, I think this is the guest again is very different. You know, you have a more affluent guest in general. You have and this is going to be where families are going to have reunions. You may have, you know, some weddings here. It's just a different draw than, say, the Myrtle Beach, where you're going to go play putt-putt with your family and you're going to go do all these other things. This really is, to your earlier point, Becca, this is more about the place you stay, because you've got the beach. You know, the people come here for the beach. They come here for the beauty. And so I think that draw is very different. I think that's why you're going to see those higher ADRs in general. I mean, you also have the focus of this market is going to be a larger property too. The properties themselves are, you know, you're going to start to see those luxury kind of properties in this market. Not to say that they're not in Myrtle Beach, because they are, but it's just a different product. It's a different product. It's a different draw. It's a different customer. It's a different, you know, that. So I think the numbers are going to show that. I do think where you might see a little bit more reactiveness maybe in the Myrtle market versus this one. To your point, like, it is a little bit newer. Some of these areas are a little bit newer, so you might not have the historical like repeat, but there's still a lot of repeat business in these areas. People come there and then they like it and they want to come back. But I think that there tends to be a little bit more reactiveness in, say, like a Myrtle market versus this market, because you have a little bit more of a, you know, higher spending guest. You know, there's probably a little less impact, although there is impact. I mean, when we talk about, you know, how we make choices, it might be a 4-bedroom versus a 5-bedroom or something like that. And that's where I think with any of these that kind of beach market, not just Charleston, but talk about other kind of natural beach, beautiful locations, I think you're going to kind of see some of that shift, not huge shift, but you're going to see some sort of shift, whether it's size or whether it's like a which equates to like maybe a rate step up or down, like depending on, you know, who you are. But I think it's going to be a little bit less obvious in some ways. But again, I think the numbers here will kind of show that. And I'll let John talk about April, and April is chomping at the bit to do that.
How did you know?
I don't know. Just
did I hint at it?
I don't know, maybe.
Well, before we talk about April, I do recall like Tom Powers talking about some of the regulatory issues on Foley Beach. So I'm not sure how that impacts everything. But I do want to, you know, that I know that's
you know,
been a big. Yep, go ahead.
It is interesting because I was looking at this obviously before we started here. This is looking at both Isle of Palms and Foley. We are seeing a slight decrease recently in the number of listings that are active on Airbnb. So for those who don't know what happened on Foley, I want to say 2 years ago now, there's a town referendum where everybody voted to cap short-term rentals. I believe the cap is at 800 licenses. I believe when the cap went through, there was something like between 900 and 1,200 listings that were on Airbnb. So the town, you know, there's a big sort of boom of tourism, I think both in Charleston, but also the beaches in general. There was a boom in the number of listings that we saw come online during 2020. And there was a lot of pushback from some of the locals on the islands. So we still are essentially trying to get the number down to that 800 license level. So there are no new homes that can go online legally in Foley Beach. Isle of Palms had a similar referendum that it did not pass. I think there's still some movement over there trying to regulate the rentals. But an interesting market that is sort of technically in this group that I've put in here, this is Sullivan's Island down here. And I think it was back in 2010, they capped the number of listings and they made it so that the licenses once you lose the license, you cannot get it back. So the number of actual short-term rentals on Sullivan's is decreasing every year, which you see crazy ADRs for homes on Sullivan's. You also see really high home prices because the rental license conveys with sale. So if you're able to buy a home that has a vacation rental license, it's like gold. So it's very interesting to kind of see these three submarkets, how they've handled regulation, and also then how it's playing out over time. But I think what's happening on Folly is still a little bit new to kind of see what sort of, really the only thing that's happened is the real estate market, I wouldn't say crashed, but lost a ton of value because people that could potentially buy a second home and use some of that vacation rental income to supplement their payments now can't do that. You have to be able to either move there and just buy a home outright, or be able to buy a second home without any extra income.
Yeah, so I think that provides some context for why this market can, kind of maintain that pricing power, right? Less supply, or limited, cap on the supply.
Mm-hmm.
And so everything that Sarah said, I think that also provides a little context for it. But now jumping into what I really wanted to talk about. So if you look at the RevPAR, if you look at February 2024, that was 185. February 2025 is 180. So similar, but slightly down.
Mm-hmm.
If you look at March, RevPAR 2024, 369. And this year it was 334.
Mm-hmm.
And then if you look at April, last year was 382, and this year is 464, right? And again, April is not done yet. So this I think this was the one that I saw where I was like, whoa, what's going on here? But definitely a huge jump in ADR between last year and this year, despite being flat or low, year over year, the rest of the first quarter.
Mm-hmm. No, that definitely makes sense. And then looking into how summer is pacing for these markets, it's pretty much on track with where it's been in years past. 4th of July is looking pretty strong. I think a similar early June was maybe a little bit behind. But what I find interesting, and it's funny, my parents actually have a house on Folly Beach, and the managers recently asked them to drop their 7-night minimum. What's funny, if we look at our occupancy final last year, I think people expect to have July and June sort of book up in like a very similar pattern, or maybe even have July be a little bit stronger than June, because historically that's at least what I've experienced in this market. But if we look at how things shaped up last year, we still have a good maybe 50% of our final occupancy to book for July. So we do want to be conscious. We do want to be, aware of sort of the macro things that are going on, be aware that the booking window is maybe shrinking a little bit, but I wouldn't necessarily be panicking for July and for our high season, at least not yet, because we're pretty much in line with where we were last year. But anything on that, or anything else you want to talk about?
It's interesting because as the state as a whole, June and July were pacing ahead of last year, right?
Mm-hmm.
When we looked at the state as a whole.
Mm-hmm.
And so it's good that this is pacing similar to last year, but again, I don't know how it was last year relative to the state, but that this market is not pacing ahead. It's kind of staying, kind of similar.
Mm-hmm.
And I think there's a lot of nuance wrapped up in that, to your point earlier, Becca, about just regulation. I mean, there's so much in this that we're not going to pull apart on this call and talk about. But so that's where some of the numbers sometimes, on paper, you look at something and you're like, oh, that looks really stable, or that looks what. It's really understanding what's going on in your market, because you mentioned 3 different markets in this same geographic area that have different things going on. And so if you're in Folly versus Sullivan's Island, like, you're going to be looking at things a little bit differently. So yeah, the numbers don't lie, but there's a lot buried in
A lot more to it. And one thing that I meant to mention, if we're comparing sort of the Charleston beaches to Myrtle Beach. Myrtle Beach has a ton of hotels that the vacation rentals are competing with. Here, there are, at least on Folly, there's like maybe a couple of boutique hotels, less than 30 rooms. There's one larger hotel called the Tides. Isle of Palms has a couple of hotels within that Wild Dunes resort, but really we're not. You don't have that sort of external competition in the hospitality space in this market like you do in Myrtle Beach. So we're getting short on time, so let's just quickly hop into downtown, just because it is probably the most different market compared to the ones that we've looked at thus far. So this is an urban market. There is there's actually two colleges in this area. We've got the Citadel and the College of Charleston. So there's a little bit of drive there. There isn't a big football team. No offense, Bulldogs, but there isn't like a football team like Clemson that is driving, driving people for these big football weekends. But there are, graduation weekends, things like that. And generally speaking, I would say downtown Charleston, while it is somewhat seasonal, it's not really seasonal compared to these other places that were really hyper summer markets. Where do y'all want to start with downtown? April, perhaps?
All right, I get to go first then.
Yeah, why don't you take it, John?
No, I mean, this one, like you said, less seasonal, and here I won't go number by number, month by month, but it is much more muted, the difference. And overall, the market seems very stable, right? In terms some ups and downs, but overall, last year and this year, very similar patterns. Again, definitely muted, but man, January really must suck.
I would recommend coming here in January. It's the saddest.
Charleston should have like some sort of like festival created in January just to bring people in.
So like Folly Beach has street festivals in their off season that help kind of drive some traffic. But yeah, January, it's kind of just, it's cold, and it's the type of it's 60 degrees. My family in the Northeast says, "Oh, you're not actually cold," but it's the type of cold that just like really gets you to your bones. And so I would say visit. My personal favorite time is April or May. Absolutely beautiful. Humidity isn't too crazy yet. But January, maybe if you're going to be here for a month to escape, winter wherever you are, it's really not where I would vacation personally.
The other thing that one last thing.
Yep.
The median length of stay is just like 3 across the board. That I'm just like, what's going on there? And I have no insights on it, but it's just like,
yeah, let's take a look at that. So like this is very much, so this chart here is showing number of bookings by length of stay. So 3 and 4 night stays are sort of this peach color here. And you definitely see that there's a huge majority of these, I would maybe call them long weekend bookings. Definitely a huge weekend market in our shoulder seasons. We do see a little bit of longer stays in maybe like our higher season, I would say, but very much a weekend market, very much driven by these sort of long weekend stays, I would say.
I think the really cool thing about Charleston is, I mean, that was kind of what I was going to kind of jump in and say in terms of like a length of stay. It is kind of a weekend warrior kind of market, but it's kind of year round, right? Because Charleston is, I guess, urban, we want to use that word, but it's also, I mean, the history there, it's becoming like one of those like foodie capital, kind of areas in the East. I mean, it's got an appeal to, the couples getaway. It's got a lot of really good things going for it, so it's got a lot of opportunity to kind of draw, but those draws are largely long weekends. Mm-hmm. So I think that may be one of the reasons why, and again, I don't have a client here. I'm not super familiar with Charleston other than I've been there and I really like it. But I feel like there's a lot of potential there to really double down on demand drivers, to, kind of capture year round, maybe not January, demand to this market, which I think is really cool because it's not just your typical urban market.
Mhm.
There's a lot to it that that you can do in multiple weekends. So you don't do it all in one weekend. You maybe have a history weekend, and then you maybe come do a girls' weekend, or you come do, whatever. And so I think there's a lot of opportunity in this market, which I really think is cool.
And
And-
given, sorry,
No, go ahead.
this is like fascinating me. Given how like stable that 3-day is, but then if you look at the occupancy pattern throughout the year, the fall kind of has a lower overall occupancy. So if you could encourage pricing or promotions that expand to 4 nights, 5 nights to get people coming in, that incremental revenue could probably be very meaningful if you're very strategic about playing with that length of stay and how you get people to stay 1 or 2 days longer.
Definitely. Talking about regulation in this market is also very interesting. So if you look at the map of your vacation rentals in downtown Charleston, you see a huge concentration in this sort of area around what we call crosstown, because there's a highway that kind of goes through the town here. And again, I forget how many years ago now it was probably 10 years ago. The city regulated short-term rentals, and you either have to, there are a lot of duplexes, there's a lot of fourplexes. So you either have to be an owner that is living on site to operate a vacation rental, or you have to be in what's called the short-term rental overlay, which is a geographic area where short-term rental licenses are allowed. And you've seen there's really 2 or 3 pretty large vacation rental companies that kind of came to be around when this regulation is happening, and they figured it out, and they've been doing really incredibly well ever since. But it is just sort of interesting sort of how things are geographically located in this market. And you kind of see that also in the growth or lack thereof of new listings in this market. This is a very, very stable market compared to some of the other ones that we've looked at on this podcast.
Yeah.
Yeah. Anything else? I feel like we have gone over. Our lovely producer Saurabh is not here today, and he usually gives me a little like thumbs up on when we should stop. So Saurabh, we miss you dearly. But yeah, any final thoughts, y'all, about South Carolina, the state of the world? Corny jokes to lighten the mood,
Should
maybe.
I talk about April?
Yeah, we can talk about that. You have like a week and a half more, John, and then we can.
Then I can't anymore, right? No, like in all seriousness, there is a lot of uncertainty. So I will be very direct with all of the portfolios that we're managing. We're toning down the aggressiveness just a tad. We're not making drastic changes, but we're kind of hedging our bets to make sure that we have some good, some occupancy kind of captured a little bit further out than we typically would. Just given so much uncertainty, I think this is not just South Carolina, but like it's kind of like, any risk-based investment. Things are volatile, and so it may be prudent to not try to shoot for the moon and just kind of, all right, let's kind of get some doubles, some singles, and get on base.
Yeah, get through it, right? I mean, like
Exactly.
that's the goal, and I totally will echo that. That is, I think, a really big thing, and it's often difficult to convince an owner, largely, that this is the right thing to do. And do we know it's the absolute right thing to do? No, of course not. But we're trying to read the tea leaves, right? And there's a lot of stuff out there that indicates that people are just not as willing to spend what they've spent and to spend it as early. And so we have to do what we can to try to capture what we can. I think we've talked about that a lot on this podcast in the past, but I think it remains and is even probably more relevant now.
Yep.
100%. Well, Sarah, John, always lovely. I always have so much fun with y'all talking about stuff. do join us again next month for our next RevLabs episode. We will be discussing another great state. And I hope that y'all stay healthy, stay happy, and we'll see you soon.
Thank you.
Bye.